Hello, my name is Ray Franklin. I'm the Senior Commodity Analyst for Energy Professionals. In today's video, I'm going to be reviewing my January 31st energy update. In my last report, I said the path of least resistance appeared to favor higher prices, but where prices went near term would be influenced by the weather through the end of March. If it was colder than normal, natural gas was poised to move sharply higher. And I also pointed out that the long-term risk had increased due to our present administration's restrictive energy policies, aggressive fiscal spending, and quantitative easing by the Fed. And those factors collectively had increased the risk of inflation in the United States. But as you can see in this chart, after my last report, natural gas briefly pulled back to the consolidation pattern, which was discussed in my January 4th energy update, before again moving higher. In today's report, I will discuss two factors that support the most recent price increases in natural gas, and why those two factors increase the risk prices will continue to move higher near term. The first factor supporting natural gas's recent rally is supplies are forecasted to plunge approximately 16% below the 5-year average over the next 4 weeks. December was the second warmest December on record, and tight natural gas supplies, which were 7% below the 5-year average in September, were by the end of December comfortably above the 5-year average by about 3%. This unexpected increase in supplies was the primary reason natural gas prices declined sharply in December. But the situation changed in January. With the return of cold weather, natural gas supplies began to decline again, and last week the EIA reported supplies were now 1% below the 5-year average, which at first glance may seem insignificant. But based on present weather forecasts over the next 4 weeks, what is troubling is the trend of increased demand of natural gas here and abroad is expected to result in our natural gas supplies plunging 16% below the 5-year average. If these projections hold, along with the second factor I'll be discussing next, the risk of higher natural gas prices certainly will increase near term. And I'm sure you're aware of the second factor. Russian troops are massing at the Ukraine border. If Russia invades the Ukraine, any possibility the Nord Stream 2 pipeline will be approved by Germany near term would evaporate, and this would exacerbate the severe energy crisis in Europe. Europe's natural gas storage this year dropped to its lowest seasonal levels in more than 10 years, which sent their gas and power prices soaring. And in response, the amount of liquefied natural gas exported from the United States to Europe set a monthly record in January. And this has also reached the highest amount for this month since records began in 2011. Also, plans are already in motion to further increase our liquefied natural gas exports to Europe if Russia invades the Ukraine. Therefore, with natural gas supplies already projected 16% below the 5-year average within the next 4 weeks, what do you believe would happen to natural gas prices if Russia invaded the Ukraine and we draw down our supplies at a more rapid pace to increase liquefied natural gas exports to Europe? If you believe as I do, natural gas prices would likely increase, then if you've not already hedged your cost of natural gas and electricity, it would be wise to consider doing so at this time. In my December 6, 2021 energy update, I said early in the 21st century, we experienced higher natural gas prices and volatility prior to fracking giving us sufficient supplies to meet our energy needs. But over the last 10 years, we were blessed with a period of lower prices and volatility, with fracking giving us enough supplies to meet our energy needs. But we are entering a period filled with great uncertainty that will likely result in wild swings in energy prices. No one knows for sure where natural gas and electricity prices will be over the next 6 months. But 4 years from now, I believe you'll realize there is only one cost of doing business you could have kept stable and avoided increased prices and volatility: your cost of energy for natural gas and electricity. And until my next report, please take care.